Time now for an in-depth look at the market news as we start the week. And for that, I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Dr. Yang, thank you for coming on today.
Happy to be here.
Well, the tensions between the U.S. and Iran have eased somewhat, and the China trade deal will be signed this week. So generally, the markets have been gaining. Tell us about that and how long you think this rally might go on.
Okay, well, as you mentioned, the two biggest factors are probably the reduction of tension between the U.S. and Iran, and the first stage deal between U.S. and China dealing with the trade war. The couple of problems, though, is that while the market tends to be euphoric over these good news, it's not quite clear whether it'll be clear sailing. The U.S. and Iran, they sort of both agreed that they would calm down, that they would not make problems worse, but I think everyone probably agrees that the tension between the U.S. and Iran has not disappeared. It's just that both sides are taking a look at a longer view, and there will be probably some kind of retaliation by Iran. We're not sure what form it'll take, but hopefully it will not be too violent, but market is taking at least the calming effect very well. And then there's the signing of the U.S.-China trade deal, the first stage deal, that's due on the 15th, though there is some indication. President Trump has tweeted that the actual signing may be a day or two after the 15th. And there has been a lot of speculation on why this deal is being delayed after President Trump has emphasized the date of the 15th. My feeling is that even at the announcement of this first stage deal on December 13th, there has been a lot of speculation on whether the deal was actually done or whether they were still negotiating some of the details. If you look at the agreement, that the first stage agreement that the USTR and President Trump has mentioned, it details a lot of measures that will take place with China buying more U.S. goods, protection of intellectual property, restrictions on technology transfer, measures on financial services, agriculture, and currency. But some of the details have not been presented in the USTR fact sheet, and a lot of the details were not coming out, including exactly how much China was going to buy from the United States. So it might be some final details that are being worked out right now between high-level officials of China and U.S., which accounts for some of the delays. And given that, though, the rally should continue at least for a few days, I think. While some of the news that's coming out from the U.S., like the last labor job creation report, has not been good, the market tends to be over-enthusiastic, over-optimistic about the news coming out from U.S.-China trade war, and this should have a calming effect on the market. And because while the employment rate and manufacturing news has not been good for the United States, the main cause of that was actually President Trump's uncertain economic policies and U.S.-China trade war. So if these two factors are settled, then it addresses a lot of the issues that the stock market was worried about.
Indeed, and it'll be interesting to see how the market reacts when the details on the trade deal do come out. But here in the Korean market, foreign investors are net buyers again for the first time in 5 months. Gains here, too, the past week or so. What's the story in the Korean markets?
Okay, well, Kospi rose 1.04% today. Kosdaq rose by 0.92% today. Kospi was led by foreign investors. Kosdaq was led by individual Korean investors. And I think we're seeing an effect of a lot of good news that came up over the end of last week and today. For example, Samsung had higher than expected earnings of 7.5 trillion won, which was nearly trillion won over market expectations. The exports for the first 10 days of January was 5.3% over the first 10 days of last year. And both of these factors were led by semiconductors. And the analysts believe that the recovery of the semiconductors are crucial if Korea is going to have a good growth this year. So these are some optimistic news. Now, the trade account that I was talking about, the first 10 days of January, Korea did record a trade deficit, but that's because higher prices of oil imports. But the reduction of tensions between Iran and U.S. means that the oil prices are likely to fall back down. And we've already seen some indications that it is going to remain, oil prices are going to remain low. So that is probably not going to be a longer-term problem. So there has been nothing but good news for the last couple of days, and that accounts for, I think, Korean stock recovery today.
All right, Professor Young, and just before we go, tell us about a few things we should be watching in the week ahead.
Okay, Korean statistics. We have two big ones and two mid-level importance. On Wednesday, we have December employment numbers. We'll have to see whether there has been a recovery in the number of full-time jobs. And on Friday, we have the Bank of Korea Monetary Policy Committee meeting. Virtually everybody believes that Bank of Korea will hold the funds at 1.25%, but we'll have to wait and see. And then the two mid-level ones for Korea, there will be new government regulation for Jeonse, which everyone is concerned about because of the government's housing and real estate pricing policies. And then Ministry of Economy and Finance will announce economic trends for January at the end of the week, and that was to show how the government sees the current economic situation and what the future policy consideration will be. And as far as foreign statistics are concerned, China will announce trade account and industrial production this week. We'll see how well the China economy is doing at the beginning of the year. And U.S. Consumer Price Index and the Beige Book report, that's the Fed's view of the state of U.S. economy, will also come out this week. So we'll see how the largest two economies are doing at the beginning of the year and what their policy consideration is likely to be for the early part of the year.
All right, Professor Young, we'll be watching all of those stories. Thanks so much for sharing your insights today.
Thank you.